Thank you. So I'm Don Echelia. I'm founder and CEO of the mobile banking service Tink. So Tink is a service that is built upon open banking. Basically, when we started back in 2013, we reversed engineered the non-public APIs of the bank. We aggregated data, and today we also do payment initiation. So we basically allow the customer to do any type of bank errand and service that she used to do with her bank. We let her do inside Tink instead. So that would be viewing balances or transferring money, paying bills, etc. On top of that, we try to help the user understand her finances. We give her financial advice, and we also have a built-in financial marketplace. So those advice would be tangible. You could remortgage inside the Tink app, as well as opening a savings account with better interest, transferring money between those accounts. And we do the entire KYC onboarding from within Tink. So basically, we let the cord cut the bank and bank with Tink instead. I think that, and also to mention, I mean, Tink has 500,000 users in Sweden. We also a technology provider, basically providing the same type of aggregation, initiation, PFM and advisory services to banks throughout Europe. And I guess it's obvious why we're considered to be an interrupter in this, or disruptor in this market. Well, I think we're combining 2 or 3 like mega waves or mega trends. One is open banking that is kind of making it possible for customers to bank outside of the bank. And the second one that we see in transition from consuming banking services offline to online, even when it comes to remortgaging. And Tink is kind of in the middle of those two trends.
Sure.
Hi, my name is Jeremy. I'm the chief economist and head of currency strategy at a company called WorldFirst, based here in London. We are an international payments company, so moving money around the world for our 125,000 customers. We have offices in Sydney, in Singapore, in Tokyo, in Hong Kong, Amsterdam, here in London, obviously, and in Austin, Texas. We started off 14 years ago in the financial capital of South London, Stockwell, in a basement of 3 people, and we're now 650 people globally. It is our mission statement to move money around the world brilliantly. We try and do this by being faster, easier, and cheaper than the people out there who previously were the big kids in the school playground, which were the international banks. We still use them as our liquidity providers, but if we can provide a better customer service at better rates and move things faster, same day Chinese yuan, for example, which is the gold standard for international trade at the moment, then we're helping British business, we're helping international business around the world. We're disruptive because, as I said, we're just better than the incumbents in this market at the moment, and certainly with the economic challenges that Brexit and other things like open banking are going to pose for this market. It's an interesting place to be.
Brilliant. Thanks, Jeremy. Yeah.
Thank you.
Yeah,
I've got the nice mic. I'm Jan Philipparts. I'm the operations director at Urban Jungle. We're an insurtech startup based here in London, and we focus specifically on millennials living the urban life, which we see is around 70% of people aged 18 to 35 in London rent their flats. About 80% of those don't have contents insurance. And that's a big chunk. That was me a couple of years ago as well. My flat got burgled into, my laptop stolen, didn't have anything. So we really saw there's a gap in the market there, where there's a group of people that just don't have the insurance that they need. And that's what we provide. We provide a contents insurance through a model that is aimed at our target audience, meaning we have a mobile-based app and very easy sign-up journey. We have basic concepts that you're used to see from your other financial services, like social login. We communicate with our customers in the way that they're used to being communicated by the other startups they see in the financial sector, rather than those big insurance companies that their parents and the generations before them really acted with. So how are we a disruptor? Well, we're a disruptor because we are building an insurance company that people actually love and like to interact with and have a positive image of.
Okay, brilliant. Thank you. So my first question for the panel is, in other sectors, disruptors have been real sort of game changers. You know, Uber, Amazon, Airbnb, Netflix. You can go on about how they've really taken the incumbents and started smashing them out completely. The last real bastion, I think, of disruption is FS, banking, insurance, FS, because the companies, some are represented here, they're huge, and the barriers to change are massive in terms of consumer behaviour. Do you think it is possible to really effectively disrupt FS and insurance in the same way that some of the companies I've talked about have done it in their sectors? Jeremy, let's start with you.
I'd say it's definitely possible. I hope so. Otherwise, I'm going to need to start looking for a job soon. But it's definitely possible. But I would say in FS and in insurance, and I've been in kind of financial services since I left school, change comes in incrementally slow increments. It's very, very slow, and the nature of the regulation of this market, particularly, you know, from the area that I sit in, from international trade, you know, a lot of people in our industry are talking about the advent of the blockchain and what they'll be able to do for payments, but what that also means for compliance. So there is a huge plethora of ability out there, but it is making sure that it still has to fit within a very, very I would say bloated and antiquated compliance network, which we sit in at the moment. So there's definitely the possibility of real lasting impact from FS companies or insurance companies, but it will take a long, long time for it to come through. But there will be a eureka moment where consumers, be they personal or be they business, sit there and say, this is better than anything that's ever had before. But it's the job of those companies to make sure that they have, you know, from a company point of view, have that hook into them to be able to say, it's better and you're never going to leave, because you are so part of our environment now that to leave would be such a massive pain that, you know, that's why people don't change their bank accounts. You know, 25 to 75% of people have had their bank account longer than 25 years because it's easy. Yeah. So if we can make it the same for business services or whatever it may be, then, you know, there is a change.
But if you take that fact, I mean, it's a good one on banking, you know, you'd think it would be ripe for disruption, but even with Monzos and Starlings, these brilliant companies, they still find it really difficult to try and break that customer behaviour.
But I think that banks have had a few, you know, monopolies. So one has been on viewing people's finances. That means that you get a monopoly on mass market advisory, and you've had a monopoly on payments. And I think that those combined have been a brilliant setup, and have created an enormous switching cost, like barriers to switch, which has been both like mental and practical and sometimes even legal. I think with open banking, essentially you see all of those monopolies going away. And I mean, we've had open banking in the UK for a few weeks, and on the rest of Europe, we're going to see it, you know, August 19 with the new APIs that will be available. I think this market, we currently see an enormous mismatch between products and the consumers. Most people inherit the banks from the parents, and I mean, it must have been dreadful for people here creating fantastic financial products and nobody starts using them because they stuck with their old bank. But I think that for the first time ever, we over the coming 1, 2, 3 years, going to see a massive reshuffling and opportunity that the technology and legislation together brings for banks to get the kind of market share and the customer base that they deserve. And obviously, that's going to be tough for banks that have subpar offerings, but I think it's going to be equally rewarding for the number of banks in even the incumbents, of course, that has fantastic products that deserves a lot more customers.
Oh, good. And Jan, how about insurance?
Yes, there is definitely a way of how we can lastingly disrupt this market. But as Jeremy pointed out, it doesn't go as fast because there is that big compliance hook behind it. And from a consumer point of view as well, taking a risk on when Uber came out 5 years ago, oh, I'm going to take an Uber instead of a black cab, was this, your cab doesn't show up. There's nothing really that big of a choice there to make, or the threshold to move is much lower. Going to a new insurance company or going to Monzo, like getting £50 into your Monzo card, fine, anyone can do that. Having your monthly salary transferred into your Monzo bank account, that's a very different step. And the same as with insurance. As a broker that we are selling de facto regulated 5-star products, but still, you need to get that trust over to customers to kind of make that first step and get that basic trust going there and get that ball rolling, and that you are a fully compliant, trustworthy business. And you know it is true, you can prove it is true, getting it into people's heads that this is really true, that takes some time.
I think to combine with something which Daniel and Jan both said is that there is one monopoly that these big banks still have, is that's a monopoly on our data. You know, they have it all, RBS have all my spending, as terrible as it is, all my spending habits since I was 16. And I still don't believe that most banks out there, and probably most fintechs out there, are using this data as well as they possibly, could do. And it is that trust thing. Carl made some very good points about trust for the big banks and how you trust the local banker, and you may not trust RBS, but they were still bailed out by the government, and therefore they have the trust of the government behind them. So, but if something goes wrong for a small fintech, if there's a data breach, and obviously we talk about PSD2, but we've also got GDPR coming in later on in the year. If there is a data breach, that's not just a kind of PR nightmare now. That could be a terminal event for a young fintech.
I agree totally that the trust issue is, and it should be substantial. I don't think that any company like Tink or Monzo or anyone else should get that consumer trust in this kind of market from day one. I so much remember 5 years ago when we founded Tink, and basically all banks said, well, it's like illegal to use Tink, and the journalists say the same. Well, and you had security experts, and what can you do about it? I think you need to be the best you and professional you every single day, and then it's not, for some people you're going to deserve that trust in one day or 1 week or 1 month. I think today, 5 years later, obviously Tink is, we've been professional every day for those five years and gained that trust. And I think that it's something for the people who deserve trust, it will come over time. And it's just one of those characteristics in this market that means that you know, completely wiping away a market like an Uber situation or Spotify situation, it could definitely happen, but you'll have a longer period of when it happens, basically.
Okay, great. Anyone out there got any opinions on whether we're due to have an Uber moment or a Netflix moment in FS?
This is very interesting, but one thing that I wasn't hearing so far is sort of these ecosystems and moving out of our core banking or my core insurance and moving into other areas. I was just wondering if any of you have any ideas about this, or are you seeing anything, or you're working on anything?
Well, sorry. We just launched our partner portal about a month ago, went live with our first partner on there, where we are basically making it very open, very easy API. We market it to any company that's out there, any fintech that is kind of targeting the same customer base than we are, can integrate with us within a day, and based on the information you have there, think of the letting agents that are there. You just signed your lease for a new place. They know how many bedrooms they have, address, of course, how many bathrooms, know all of the information you basically need to get a very customized quote for a contents insurance that is there. So you can integrate with our API, we give that information straight back to you with a customized quote for that customer. You can tag on to the exit journey and go back onto our website and complete there. It's a win-win situation for everyone. It is the partners we work with, for us of course, and for the customer, because it just becomes one integrated thing. And yes, that's definitely something that we're working on big and that we see as one of our main acquisitions tool going forward.
Yeah, I'd certainly say the same thing. One of our biggest, or the largest growing areas within our business is online sellers, so the e-commerce offering. So people selling on Amazon, they may be a British company importing from China but selling into the United States. Now they may never take that good, they may never warehouse that good, you know, in their garage in Stevenage or in a huge warehouse somewhere else. Amazon will fulfill that and take care of that themselves, but our API will sit behind that Amazon portal and they will pay for something in in Chinese yuan. They will sell it in US dollars. There'll be a currency conversion back to sterling, and it's all, you know, all set up via WorldFirst accounts, which we have set up for them in the background, saying this is your Chinese yuan account, this is your US dollar account in New York, this is your sterling account here in the UK, this is your euro account in Germany. So if you're able to sit behind that ecosystem and obviously bring on more marketplaces for those sellers to be able to sell in, because Amazon is not the only one, as much as I'd say 90% of my paycheck goes that way, then you're able to, you know, continue to build and build and build.
And I would echo that. I think it's extremely important because we're going to see so much more competition in this area. So you kind of can't, while you before said, you know, I want to be a universal bank, I want to produce all services myself, I think that you need to win each, you know, segment of this market, and then you need to partner with whoever is the best. And for the Tink consumer app, I need to partner with the best mortgage providers, which being large incumbent banks in Sweden, and I do. On the other hand, the Tink technology is also powering large banks like Nordea or Klarna or ABN AMRO, for example, for the exact same reason.
I mean, I think that's a really, really good question, because having worked myself in big corporates. No. Yeah, what, for one for all the family? You know, having worked in big corporates myself, one of the things I see as a key difference is the ability to partner. So in big corporates, there's still not a lot of thought, I think, into how do we work with others to create an ecosystem that benefits everyone. Because when you're in a startup, you're always thinking about how can we make our systems and services able to link with other people's, one, because it gives us revenue and acquisition and that sort of thing. And so I think what we're going to see a lot more of is these smaller fintech, insurtech businesses able to partner with each other and with others to grow bigger, quicker. Because they're building systems with APIs and all of those sort of things that, so putting them together becomes very, very simple. And I think that's something that some of the big organisations hadn't thought about yet, that it's maybe not just one on their own, but 1, 2 or 3 all partnered together suddenly have punching power, which is really, really difficult to deal with.
One little lesson that we had at WorldFirst is back in 2009, we started offering derivative products, options products to businesses for hedging purposes, and the only bank that would offer us a line at that point was Bank of Ireland. It was a, you know, it was a bit difficult. It was quite, you know, it was quite a manual process to go through. Last year, Bank of Ireland came to us looking for the ability to open up dollar accounts for their clients in the United States. So we're now their provider for that. It's interesting to see how the banking system has therefore changed. Yeah.
So if I pick up on that, my second question was going to be all about core competencies. So maybe partnering is one of them. But what do you think are the core competencies that make fintechs and insurtechs across Europe and the world stand out to customers? That what makes the difference for customers of those and makes them able to challenge traditional markets? What are the things they do particularly well?
I would say certainly for the business customer, and this is where I always come from, is the business customer, is that a lot of it will be price orientated. If you can undercut, if you can make them feel that they are saving money and therefore their bottom line is going to look better, but also freeing up time for them. Because the majority of small and medium-sized businesses, you know, 1 to maybe 25, 30 people in the UK and in Europe, there will be a person who does the accounts, but he'll do that on Thursday afternoon, and then he'll have to put his marketing hat back on because they're doing some new dynamic marketing on eBay or whatever it may be. So if you can make it that much easier for them and not have to take them through every single data process, as a large bank may have to. Plus also if you're smaller, if you're more dynamic as a fintech business or an insurtech business, then that allows you some time to be able to understand that company's business just a little bit a little bit more. And as much as it can be data-driven and online and app-based, you know, if there's a personal touch to it, then they will actually maybe enjoy speaking to you or enjoy dealing with you, as opposed to seeing it as part of the rigmarole of international commerce.
Okay.
And I'm just also humbled by the fact that, you know, Tink is a 60-man band in Stockholm, and when hearing the Barclays transformation, I don't know if you're 20,000 or 60,000, but you're enormous, and you have an existing customer base that you need to cater for, and you have tons of branches that needs to go with that new strategy. And I think it's a great advantage that we have is that we can only focus on the customer of tomorrow and say how will they work, how will they interact, whereas incumbents must also take in consideration existing customers, existing employees, and existing infrastructure.
Yeah, that's true.
Yeah, it's the same for us. It's really, I think, putting that customer first, and the ability to do that in everything that we do and have that straight feedback loop. It's if you have the benefit of being all in the same room and having your customer service person sitting next to your product manager and have that direct feedback loop, you gain so much, and you can get that real speed of going, where it would take the likes of Barclays probably a one-year project to really take the feedback they gathered from branches and launch that back into new products. We can do that within 2 weeks, and we can really understand the needs from our customers much quicker and act on them much quicker.
And never forget what it was like to be a small business yourself.
Yeah.
And advocate that to the customer themselves as well.
Yeah, I think it's really interesting, again, having worked in both. The reality is a big business can pretend to want to be like a small business, but it's not, because it's a huge safety net. Whereas actually when you're a small business and you're 30 or 60, or even when you're 450, or, you know, you're still thinking about cash flow. You're still thinking about, we've got to get a product to generate revenue. That revenue's got to work. It's got to work for customers so they buy more, because if they don't buy more, we're going to run out of money, we're going to get out of business. You know, the reality is lots and lots of startups don't make it, right? And they don't make it because they run out of money. And so getting a product that works for customers, they buy it and use it, becomes the lifeblood of a small business. There is no safety net, right? And that competency you don't get in a big, because there's always a safety net. How about speed? You know, I mean, Jan, you've talked about speed, but I always think the whole thing about big and little fish isn't the key. It's sort of slow fish and fast fish that wins. I mean, is there something about the speed at which your organisations move that you think is making a real difference?
I think it's extremely important, obviously, speed. I think that focus is equally important, and I think to tie that together with the safety net, I've seen so many situations also in the Tink life that we like, either we go bankrupt the first years, or we do dramatic changes. Then you're in a position where you dare to do stuff, and you're also in a position where you have an enormous pressure to do stuff fast. And I think that speed is definitely one of those key things that makes fintechs sometimes more successful than the incumbents, but also why I think some of the banks decide to partner with companies like us.
Yeah, this is people's money we're talking about here. And if they don't want to hand it over to someone else for any longer than they really have to, they want it in an account with their name on it. And that may be a sterling account or a euro account, but they want it in the ether of the payment system as short as possible. We have the Guinness Book of Records, a record within the Guinness Book, spit that out, for the fastest international transfer. We moved money from the UK to Germany in 7 minutes. It was from one account to the other. This was back in 2011. We do it now instantaneously, and that, we were talking about NPS score earlier and the 5-minute delay. The ability for everyone to be on, be it travel or network coverage or Wi-Fi or whatever it may be, that money is exactly the same now. And if it's not there when it's expected to be there, then you are guaranteed disappointment. You're guaranteed, lower customer feedback as a result.
Yeah. No, I think there's also that ability, as you said, to push the boundaries. We talk about maybe one day having a customer on the phone and they say, yeah, have you paid my claim? And we go, yeah, we've just pressed it, and their phone buzzes, and we go, that's it. That's the payment from us. You know, and we can believe that can happen, and we can actually partner with other people who might be able to make that happen for the reasons we said before, which makes all this the whole fintech, insurtech disruption thing a real possibility. Any questions around core competencies of fintechs from the audience?
I have a question. Did you, when you just started, debate if to go international or locally? And do you have now a vision to go international?
Who's it for?
With Tink or?
For everyone. So this is one of the big issues for startups. When you start to be successful, do you just stay in your own home territory and try and grow there, or do you try and expand internationally and take your core competencies, the things you do now, into different markets geographically?
I think that US companies, they're so good at the velocity, the speed, bet everything. And I think that Swedes are not as good, including Tink. So we've been very conscious and said, you know, we want to see the unit economics on the consumer side to work out before going elsewhere and be very close to that. So instead on the B2B side, we've followed our partners throughout Europe. So we're now to be in 10 markets, European markets by Q2. But then it's also been kind of slow moving. Say we have someone who's actually need to buy services and want to buy services in those markets. So it could I think we could have been more adventurous.
Yeah, I mean, we'll always be an international company. Whenever there's a currency transfer, there's someone buying a currency and selling another currency. And if you're just based in one territory, you'll only have one half of that transaction. So if you're able to sit there and say, this person's selling dollars and buying Japanese yen, then we need to look at the other side of it and saying, right, who's receiving that yen and what are they going to be using that? We're going to be using that for. So obviously we focus in on the international trade routes and the economic center of gravity moving closer to the east than it has been for the past 20 or 30 years, and therefore, our focus is almost exclusively on Asia at the moment. But that's not to forget that, UK, Europe, and US Europe are going to be huge trade flows as well. So, yeah, where there's muck, there's brass.
Yeah, and I know early days for you to be talking about European expansion and worldwide domination, but you guys, any thoughts about that?
Well, it's on the roadmap, let's put it like that. But yeah, no, it's something that's quite far off, because also one of the key things is not to lose focus and not to go and try and do too many things and go into too many different markets, especially with something like insurance. We're just quite regulated per market, not to get bogged down with the FCA is enough. We don't need to have the FCA in many
plus. And I can answer that question for our business at Bought by Many. We're actually probably a stage further ahead than Urban Jungle, and that comes up. And one of the problems you have is the other thing I always say about fintechs in terms of core competencies, in many instances we're playing in a different play field. We're raising money from VCs, getting injections of 10 or 20 or 30 or 40 million to do the next and burn a lot of money, which is not what incumbents are there to do. So we're often loss-making until we can get to the break-even, which is down the track. The reason your question becomes really relevant is that when you're going through your next fund round, the VCs are saying, where are you going to make more money? Where are you going to make more money? You can't just make more money here. You've got to go and make it in America, mainly, or somewhere else in Europe. And there is a lot of pressure, I think, to start thinking about expanding in other countries or taking your core skills that work in the territory and trying to use them somewhere else, depending on what the regulation and the competition is in that space. But sometimes that's driven by other factors other than how you want to expand, i.e. the sort of trajectory that you're on and how you retain that trajectory going forward, which is very, very challenging. And people think it's all easy for being a startup or a fintech, but there are other challenges that are things like that. Ooh.
With the opportunities from DST2, do you think it makes you less likely to white label any of your products or services with big banks in order to drive revenue?
Good question. I don't
know. If that's for me, no, the opposite. I think that we've seen our technology being, while we have been a challenger, and the banks have had problems taking the same bets as we did, while reverse engineering, for example. We see that banks need the regulated environment and the horizon of, we know where this market is going to be in 5 years. I think that the partnership for us has been so much more important and valuable on both bank and Tink side because of open banking and PSD2.
Yeah, I'd be inclined to agree with the Bank of Ireland partnership as an example. Is that certainly for I keep going back to small and medium-sized businesses, but if they're paying internationally, it's not just the money transfer that they need. They will also need factoring, for example, invoice discounting, all the kind of things that would typically be offered by disparate financial entities. So PSD2 is a wonderful opportunity for this kind of market to serve people who have, as I said, had to wear very, very many different hats from under one umbrella.
Yeah, open banking doesn't directly impact us within the insurance world, but what it does do in our world, I think what we discussed earlier as well, puts more of a mind frame around partnerships and how valuable they can be and how much there can be gained from that throughout the financial industry's world, really.
Yeah, I mean, my view on that is the open banking end, but generally is what the great thing that fintechs or startup businesses are doing is having an element of trust. So people trust them, they get going and they build trust where sometimes the trust isn't there before. So you're able to brand build more quickly. So actually you can use your brand more powerfully than maybe has been the case before. So white label, we've talked about it recently in our business, about white labeling for other people. We think, well actually, our brand may be more powerful than their brand is. So actually, why do we really need to white label? Because we already have the trust. We just have to try and build volume. The old way used to be white labeling, but maybe it's just more marketing or more partnering, but with our brand involved, not as a white label, because actually we can build trust maybe where there was no trust before. So, one more question. I think we've got time for. Oh, have we got time for one more? One more. 5 minutes. Thank you. So, one thing I wanted to touch on quickly is the role of technology. So. Tech, fintech, insurtech, tech is in the middle of it. How pivotal do you think the role of technology is in enabling these startup fintech, insurtech companies to be disruptive? I'll start with you, Jan, because you partly answered it already.
Well, it is key. Our company, our two founders, one comes from the insurance world, the other one comes from the tech world, and it really is matching those two together. And I think that what we do need to understand or keep in mind with that, because we tend to get lost sometimes in the technology and how nice and flashy and cool it can be, that it needs to solve a problem that is there, an underlying solution, because just technology for technology's sake is actually not going to really disrupt any market. It is all about solving a customer's problem in the best possible way. And having technology makes that a lot easier, and you can give better solutions to customers. But just that itself won't really cut it. Every company now pretty much has chatbots and has very nice ways of interacting with your customers. Great. I still have a question. I now need to speak to a person. If you can't follow that up with a great experience afterwards, you're still not really going to make the mark.
So it's key and pivotal, but it's not.
It's not enough.
It's not enough on its own.
Yes. It needs to support an underlying customer focus that really needs to be there.
Yeah, I'd say the systems are important, and 10, 11 years ago when I started with WorldFirst, we had one IT guy. So if your computer went down when he was on lunch, you were stuffed until he got back, and now we probably have 250 here just in London. I think it's all about maintaining a balance between IT, continuous improvement, and UX, and making sure that they are all working in a similar kind of life cycle. Because as you said, flashiness is great, and if you have a fantastic product, but no one can actually work out how to use it, then it's not a particularly good product at the end of the day. This is a customer service and customer experience talk. So when large amounts of money are being transacted, still people prefer a nice voice on the phone. So we've always maintained a internal mantra of 3 rings, which is the phone will not ring more than 3 times before you're able to speak to someone. There's no kind of automated answer machine or press 1 for X kind of menu. So you can do everything you can online. You can access to our entire product suite online, but if you just want to call us, you can call us and you'll be through to someone in 5 seconds. So it's not the be-all and end-all, but it's a fantastic bedrock for expansion.
Right. And scalability.
Yeah, exactly.
I mean, Tink is an engineering company or product company at heart. I think 70% of our employees are engineers. I think, as you do, I think it must be mean to get somewhere to fulfill the vision. But I think it's definitely key in transforming this industry.
Yeah, I think the key is scalability and speed. I think that's what great tech built from bottom up now gives, and partnering, and I think that's fundamental to the journey too, but not the be all and end all. Any last questions for the panel of disruption? Oh, there was none and then there was two. I like that. We'll go to the back of the room first.
Okay, so you probably, Jan probably kind of hit the nail on the head just a few minutes ago. I'll give you an example. So I love my bank's app. I use the app. It's very simple, it's very clear, it's very reliable. But if anything goes wrong, I want to quickly talk to somebody and get something sorted out before my money disappears. So with disruption, there's an awful lot of tech, there's an awful lot of, there's a lot of digital kind of disruption. But do you think it's a generational thing that people will speak to somebody, or do you think humans will always like humans?
Great question. I have an answer to that, but let's put it to the panel. Yeah?
I don't think it's necessarily a generational thing. I think what is a generational thing, that was difficult, is how will you speak to that human? Will that be picking up the phone? Will that be through chat? Will that be through email, Facebook? And I think where we see moving away from is, at least at our companies, phone calls, pretty much the only people that call our company are trying to sell us something. Everyone else just contacts us through chat, which makes it a lot easier for the person answering, for our customer service teams, to give actually a much better service back to that customer, because you can, they don't need to wait on the phone, which is one thing, while you look it up, and to just kind of link it all in, give exactly the information that a customer needs, redirect them onto your website, onto different things. It just makes it a more streamlined and easier process. And I do agree, there will always be a need for people to talk to customers, or it is just how do you manage that, and how do you make sure that that is a pleasant experience that people walk away from. This is actually quite nice. We see it from a way, actually, the moment a customer contacts you, you've lost. You've lost the first battle. The first battle was that it needed to be easy enough for them not having to contact you, but there is a second battle to be won, and being able to really give them a good, helpful explanation where they then go on and actually recommend you to friends later on, because you know what? Actually, this was so great. I'm not sure who it was. I think it was with Monzo, had their customer service on the phone or on chat, and it was so good that we tried to offer him a job at the end of it, because he literally had that good of an experience on us. That is really the level we want to get to.
Okay.
I mean, I'm not a big fan of the human interaction in general. I think that when I see the best services, I mean, that would be like service by design, meaning, I guess services like hotels.com or Uber, within the service experience or the UI or the product that they created, they kind of eliminated probably 95% of the need for me to speak to someone, like where is it located, how long is it going to take me to go from there, what's the rating of other people with families, or where is the cab right now, is it 3 minutes away, 1 minute away. I think that eventually we'll see services where not 90% of the needs are kind of taken care of in the design of the product, but probably 99 and almost 100. And I love those cases where no need for human interaction.
I think there may be a generational thing to it, but I saw Accenture released a report late last year saying that 87% of millennials still envisage using a branch for some part of their banking and would like access to a branch as part of their high street banking experience. Now, I haven't set foot in a branch for probably 3 years. But would I still want to speak to someone over a counter when remortgaging, for example? Probably. So there is always going to be an element of that, you know, as Carl was saying, looking through the window and being able to maybe blame someone else if something goes wrong. Maybe that's the kind of the emotional deposit that we have to make on the company that we are dealing with. And I don't foresee that going away anytime soon.
Yeah. And just to finish that, I think at Bought Mini we have 0.1 contacts per quote. So most of our stuff is straight through digitally. But when we measure the satisfaction of the purchase experience for people who've had to call us and speak to a human compared to those who didn't, it's at least 20 points better on NPS. 20 points better. So I'm not saying that that's a good thing. I'm just saying when people speak to people and they do a great job with them, they love it. And I don't think that's a generational thing. I think that's just a thing, you know. Right, sorry, I know we've got another question there, but I think it's time. I'm getting the motion over there. So I would like to say thank you to Daniel, Jeremy, and Jan. I think it's been really useful to talk about starting up and stuff. Round of applause, please.